Well, welcome back to another market update with me. Thanks to all those long-time listeners of these. We've been doing this in this format, going back into mid 2017 already. So thank you again if you're a repeat listener. That's probably mostly my redliners, but anyways, I know there's a bunch of you as well that have tuned in the industry and around. Today we're going to dive in to the first month of data in 2019 and discussing kind of how we kicked it off, and that's what I'm going to go into today. I'd like to start with a few very high-level pieces of information as I always do it, and I call it my State of the Union. So let's go into that here. Now, January is historically one of the slowest months of sales. So we weren't expecting to see much change from December at all. And lo and behold, this is exactly kind of what we came across for all property types. However, there was one exception, and that was the apartment segment. We saw about a 20% increase in sales from the December numbers in the apartment segment in January. So that's nice. It continues to fight back like I was telling you all of last year. The one major difference, though, we saw in January versus December is inventory. As you expect in December, inventory continues to peel off of the market as we trend towards the Christmas season. But then in January, we see a big resurgence of listings. And again, this happened and is continuing to happen. And some people ask me, well, Darren, how much? What is the difference here? Well, honestly, it's 2 to 3 times more listings are coming onto the market in January than were coming onto the market in December. So what this means is with sales about the same, December and January, it will feel much slower for sellers as the showings are now spread out across a swath of new inventory. So that's the main difference. Sales are the same, but inventory is way different. Let me show you some graphs and a few selected ones that I pulled out to better clarify a few things, and I'll make a few points around that. So let's go into graph number 1. As you can see here, I boxed something on the right-hand side, and this is what I'm calling our new normal box. You see across those last 1, 2, 3, 4, 5 columns, there's some subtle differences. But as you can see in this new normal, basically since 2015, sales are virtually about the same without any massive changes. So that's what I want to point out first. The last 5 years, the new normal we're talking about is not feeling really much different year after year after year. It's about the same. Now we're also going to pull up graph number 2 to talk about what that means. What you see here is this is the inventory graph. With the inventory graph, sales are the new normal, and that is about the same. But as you're noticing on this graph, is year over year, the inventory continues to climb upwards. And you can see that in this trend with the arrow that, despite the sales about the same, unfortunately, inventory isn't doing the same thing. It's getting higher and higher. Now we'll pull up graph number 3. This graph, I've set 2 boxes. One on the far right, which shows December figures. And you're probably gonna have to pause this video to get deep into that to see the numbers. But some people really love to see the number, not just think of it as a percentage difference. It might feel a little bit more real. And then January is on the left side. And the reason the column is in the box is taller is because it shows January last year over January this year. So again, take some time, look at this graph, and you'll get a bit of a sense. But it's meant to illustrate 2 things. That January last year, that shows our sales are quite a bit off of the pace from last year as a whole. So top left over bottom left, you'll see a massive difference. We're seeing about 15% difference in sales year over year. The right box shows to quantify that sales in December and in January, these last 2 months, were about the same. We're just not the same year over year in the month, in this given month. So we'll go into graph number 4 so I can illustrate another thing for you. This is going to be kind of like my last macro graph to talk about today, but I've created that red line that goes across. What you will see is on the far right of the graph, that is this January. This total inventory level is where that red line comes across. But then if we go back, you see on the far left side of the graph where that intersects. And you'll see that's February to March. So what I'm trying to show you is we've just finished January. But if we relate it to our most recent year in our memory, which is last year, we're already sitting at a picture with inventory that is almost what March showed us. So you're seeing that's not where we want to be. We have more than we'd like to have, and it's already feeling like a February or a March as far as inventory. But we know, like I just talked about, sales are starting from a low position. So that's not great for as we trend into the next few months. So those are the macro graphs I wanted to talk about. I said those are the last ones. I'm going to pull up my fifth graph here, which is hyper targeted to the detached market. So this is my fifth graph to show you. And what I want to show you is when we think of our market, it's broken out across all these different types of properties: detached, attached, condos, semis, and rows. But always, year after year, the detached market makes up about 2/3, give or take 60% to 2/3 of all sales that happen. The reason we're seeing this overall slowdown now impacted is because the detached market has now started to feel it too. So this steep graph where it's going upwards is showing that the inventory and the months of inventory have climbed substantially, and that's a much steeper curve than we would ever like to see, unless that was price appreciation, because then we'd all be very happy. So this is why we're seeing the slowdown, because the big meaty part of the market is trending upwards as far as supply and inventory. But in contrary, we'll go to the next graph, which is graph number 6 already. I talked about the one shining light, right? The one shining light out there, and that's the apartment market fighting back. And this, again, big chart, sorry, pause it if you need to look. December's on the far right, and then on the far left is now, 2019 in January. And you will see that we did see about a 20-ish% bump in sales for the apartment market. So good on you. Keep going. So I've talked about a detached, I've talked about apartment being the shining light. This last graph that I'm going to bring up is to do with, again, the semi-detached months of inventory. So this is the graph number 7 here. This graph, again, is very steep. We saw a rise in semi-detached inventory last year, as well as the other attached product, which is row. Right, so the townhouses and the infill type stuff all saw a massive bump in inventory at the end of the year, and this is continuing. So this steep curve resonates both in the semi-detached and the row market. So just be careful if you're in those brackets, because you've got a lot of competition, and the months of supply is quite long right now. All right, well, that's the different property segments. There's more micro data, but I don't want to bore you. But let's dig into the price ranges. It's always interesting to figure out where are the price ranges trending better or worse, because this might matter to you depending on where your home's priced as well as what you're looking to purchase. So if we pull up the very last graph here, it's more of a chart that I use internally. The only thing I really want you to focus on is these green bands. And these are those highlight zones of property prices that are doing better than last year or equal to. There's only 3, but the ones that are doing it, $350 to $399, the $650 to $699 is at 0, so it's about the same as last year. And then the 1.25 to 1.5 market, again, is 40% more sales and 30% more sales with that $350 to $399 bracket. So there are a few segments of the market in general that are having an incredible start to the year. We'll see if this trends go forward or not. Unlikely, but I'm here to talk about it month to month, because it does matter to you month to month, because you're selling or purchasing in that given time period. So that'd be enough in regards to what I'll talk about those specific price ranges. The other main topic that people reach out to me for is around the hottest market segment. So which areas of the city, districts, are doing better than others across the price districts. I'm not going to go into every one of these because, again, it's too much data and only guys like me are going to want to know about it. But the big thing to note is that the sales to new listing ratio have really come down. And the reason that is because the inventory really climbed, and you're only seeing about 30% of all listings, give or take across the market in each of these districts selling through in January. Not out of the normal, but just the numbers don't look great. It's just because of the swath of new inventory. When we talk about best and worst performing markets as well, we also talk about benchmark price. What I'm here to tell you is about basically across detached apartment and the attached product, we're seeing two things: typically about a month-over-month decline of about 1%. Right, that's still happening. So these benchmark price declines are still happening, and it's because that inventory is so high. The only one is, again, the apartment market, which is basically flat. We saw no decrease in values from December to January, but the other three did. Speaking about hottest communities, which ones are the hot communities out there? Again, this is it's kind of fun. It's kind of like game show host. We have a lot of communities in around Calgary. I break it down into, again, the sell-through as well as the months of supply. The average months of supply in Calgary now is into the mid-6s. And then for apartments, it's over 8 months of supply. So when I talk about hot markets, I'm kind of cutting that in half and saying anything better than that is doing fairly well. And I've got a whole list of them. I'll probably just post these into the comment, but some of the hot ones: Ramsey, Bayview, Castle Ridge, Queensland, and Abbeydale. Really low months of supply. Great news for you. Again, very affordable areas. Bayview may be the one exception there, but it also doesn't have a lot of inventory to talk about, so the data might be a little bit skewed. The other part is which communities are selling through so well. Again, Queensland, Rutland Park, Castle Ridge again on there, Beddington Heights, and there's a whole bunch of them that are selling kind of 1-to-1. Those other ones I mentioned are all doing better than all of the ones that hit market were able to sell. So again, there's more to this. If you're interested to note, please just make a comment. I'll get you all the information you need. Now, my favorite part of the update is always buyers, sellers, and the greater Calgarian. So for the buyers, what should you know? Well, what can I tell you? It's the same message I've been telling you for, I think, over a year now. And it's simply that this is your time. We are seeing sale price to listing price ratios actually come down significantly. And some of the types are about 5% off list price. That's much more than we typically see in the Calgary area, which is like 2.5% to 3% off list. Now we're seeing closer to 5%. If you want some great deals, deals are happening, and they're happening across all price ranges in all parts of the city. The other thing for you is buyers. Mortgage rates have actually gotten a little bit better. They've come down in January, which is fantastic to couple that with these opportunities to get lower prices. Sales will pick up as we continue into February, March, and onward. So in terms of maximizing your leverage, this is the time, absolutely right now. Now, if you're looking specifically, the row market, when you look at the trends, it's ripe for the picking. Its month of supply has risen really quickly, and its days on market as well. So there's strong motivation in that sector, I promise you. Now for my sellers and my upcoming sellers that are about to hit the market, that new normal thing I talked about, you've got to embrace the new normal. If an agent is telling you it's okay to compare your home against one that sold a year ago without making any adjustments, they're just wrong. All pricing has trended down, and the new normal is pricing based on a lower price and still a declining month-to-month market. So that's very important. So hitting the market, getting there, and looking interesting to buyers, bam, like right there is very important. So they see you. They know that they have the upper hand. Buyers know this right now, and each day on market, it gets better for them. So beat them to the declining prices and give them something that they just can't refuse. That's your job as a seller today in this market. Also know your product and ensure your agent does too. They need to have the confidence to tell you this, or honestly, you're being set up for failure. even though they may not even know it. In this market, knowledge is the most important thing to you as the seller, and having an agent that can provide you the real market information. Now, for everybody else, the greater Calgarian, the 95% of you listening, what should you concern yourself with? Well, in these times of slower real estate, we're seeing rents and the rent values already have bottomed out. And now vacancy rates are getting lower and rents are projected to rise this year. So knowing all of this and knowing that prices are lower, it may be a great time to secure rental properties at low prices before the cash flow scenarios start to get better for you. So get it now at its bottom out. The majority of the new migration to Calgary is expected to affect the rental pool, not buyers for Calgary. So this could be just that opportunity that you're waiting for. So as I wrap up another market update, January is just January. It's 1 month. It doesn't tell us too much. The real value in the data will be as we complete Q1 and enter the spring market. So watch for me speaking about the real trends as we come into the selling season. So thanks again for tuning in. As always, any specific questions, as you have been doing, reach out to me directly, make a comment, and I'd be happy to help. So thanks again for sharing your attention with me. See you next time.